Hello guys and welcome to another weekly update. Going straight into it, as we can see the week to date asset performances, we had a very clear risk off market with equity being down week to date, especially US with the Russell 2000 with minus 4.2% and gold and dollar being up. So very clear positioning of the market. If we look at a more on a technical perspective, as we can see, S&P was trading lower after we got that non-farm payrolls revisions, which were very bearish, especially for some industry-specific employment data. So I'm going here quite quickly, but I want to go to the manufacturing payrolls numbers. As we can see, for July, we got minus 11K, and this is generally continuing the downtrend, and we are at this kind of situation where it seems to be not stopping, especially if we look at the ISM manufacturing index. We also saw a very bearish print for August with 48, with expectations of 49. So very bearish trend. It seems to me that this downtrend momentum is going to accelerate. We also see the same picture in the conference board leading index. So all of the leading indicators are seeming to be accelerating to the downside. So we should not expect this situation is going to recover. And a thing I'm always looking for, so I'm bearish. I was bearish for quite a long term because key leading indicators are not seeing any recovery. We're in a very long but a very clear market downtrend, and I don't see this for the broad market to really going to play out very good, especially with the current valuations. We should see a deeper correction. In my opinion, like if we look at this symmetry, we usually see like a 32% upside movement, like around 32% to, yeah, here 38%. But actually here we actually also got a down movement of around 6% after we increased by 30%. So we usually see those kind of movements, and we go down by around, yeah, 12%. So here it was 10%, 11%. And if it's going to be a crater bull down, we should expect 22%. So if I'm looking at the S&P 500, I'm certainly looking for lower here, especially from a technical perspective. We reached pretty overbought situation. We have very high valuations, and also from a technical pattern, seeing a clear rejection from the market and seeing a lot of weakness. So I'm expecting that this downtrend is going to continue for the month ahead because macro is very bearish, and also the market seems to be now moving to a more bearish standpoint. So I am looking for possible long, actually also some long trades. So of course I'm not just going short the S&P 500 because we can actually see a recovery. I'm not expecting a recovery on a month basis, but we could see, especially like this week, the week ahead, I'm more or less thinking that this reaction was pretty hard. So which should see recovery. And then we're also at some support levels, but from a monthly perspective, I'm really keen to positioning myself short. So I'm actually maybe shorting the S&P, but I am also wanting to be long some individual stocks because I think um, they should perform better than the relative market or should stay stable. So it's a good hedge. If the market goes up, I even think that those stocks would also go up. So starting with United Health Group, so they had this investigation of I'm not really into it, so I'm just also here from a technical perspective and also from a financial numbers perspective. The current valuation of, I don't know, the P ratio is currently at 10.8. I think they make like 20 billion in free cash flow. So for me, it just makes sense. And also from a technical perspective to go long the stock. So I'm looking for an ladder long. So I'm going to be long here. I'm going to be long here, and I'm also going to be long at 180 and probably putting my stop loss at 165 or something like that. That's for me the first trade. I'm looking forward to it. So 3 positions and averaging down. For me, also Google, a long-term position. I'm looking forward to, like, I don't want to short it, but I want to long it here at 175. I think it's a good long-term positioning. Next thing I want to, and I'm probably going to short market and long some equities. The next thing I want to be longing is actually spread trade. So I'm looking for an spread trade. Should be here. I'm looking for a spread trade, so that's the healthcare sector against the technological sector, so the KLV against the KLK, and we should see some recovery from here, in my opinion. So the ratio is actually at .com levels. So in my opinion, we see some similarities with .com. We should see a risk off in August and September. So I also see that this current situation, which we also see in my presentation, in the next slide actually. So the next slide, we can see utilities being up and also where we have healthcare. Healthcare is actually down on the week to date pretty heavily. But on a month to date, healthcare is quite stable as it is utilities. So I'm actually looking to long those sectors and going to short the over performance stocks. Yeah, probably should look to short aerospace and defenses, but in my opinion, this doesn't make sense in the current macroeconomic situation. I'm also looking to short ITB, so the home construction sector. We saw a pretty clear recovery, but I would say like this is also a very good proxy. Yeah? This is a very, very good proxy in my opinion. A bit crowded. I'm just going to delete some of those. So as we can see, we're having here a head and shoulders formation, and we're actually retesting this head and shoulders here. And actually on the daily chart, we are seeing an bearish rejection from it. It isn't the rejection I wanted to see. Like I wanted to see a greater bearish reaction off of that, but still it is a rejection. And I'm probably going to short it and stop loss above here. Very nice trade, very tight stop loss, so that's just good, just very good. Maybe I want to see, like I'm probably not going to short it right away, limit position. I want to see some more weakness here. I would really want to see that the trend is going to the downward because it actually was quite bullish on the day, which is very weird. So relative to the overall index, to the overall S&P, this actually outperformed, which is very weird in my opinion. But I'm here looking for around 28, of course. This would be uh, would be similar to past recession again. So that would be very crazy. So it's a very speculative short, but I like it. I really like it. I think doesn't make sense that we see this recovery, and also the pattern works in my opinion. The pattern really works with the current macro situation where we just see the reverse, which is a bit weird. Markets should be leading, they should be pricing it in, but it's pretty similar, right? We could see a bit higher still, yeah. Like also in 2008, which is 2006, we're still maybe pretty early. We also saw a 37% recovery, yeah, very similar. So it is not unlikely that we actually get a higher recovery from here. Yeah, I think it's weird, but the market is not, especially in the short term, is not always very, how is it called, rational. Especially in the short term, there are huge fluctuations, as we also saw in 2007. Yeah, this was in 2007. We saw extreme recovery in the most bearish sector, which corrected 87%. So it just wiped out nearly every equity, or every stock in that home construction space. So yeah, we still could see higher, which is due possible short squeezes. Yeah, so this might be an early short. So I really want to see lower here. I really want to see lower here, but I don't really like the rejection. I must say I don't really like the rejection, and I don't really like that it's up, especially as the market is down. Like, bit weird. And next thing I'm looking into is Doc, so Don't Co. They're doing Austrian-based company. They're doing what they're doing is, how's it called? Yeah, airline catering. Yeah, so more or less for the rich people. So the stock actually also very volatile. It bounced very aggressively. It actually, I don't have this things here, but it bounced 60%. 60%. That's a lot. So very similar to also to 2004. And we have this very cyclical situation, and we see a very clear market rejection. So I could see, and also here, very tight stop loss for me, just putting a 10% stop loss for, yeah, possible 12% gain. So really looking forward to that. And yeah, that's all. So short Don't Co, long United Health, long the healthcare against technological sector, spread trade. Um, Probably also looking for long in Google, and also probably looking for long in Novo Nordisk and in ASML, just to have a little diversification. So long, maybe. I'm actually quite long here, right? So it's not that best. So I'm probably going to be longing those and also shorting the market, shorting the Russell, probably the Russell 2000. I like this, the risk reward. It's just better. I will short the Russell, will be longing Novo Nordisk. Will no, probably not going to be longing ASML. Those should outperform the market if it's going down. If they're actually trending lower, I think they shouldn't be trending much lower. If I'm just a buyer, I will be a buyer. Um, I don't know. It's if this is really representative of bearish view. If you're long that lot, mm, But we also short don't call, right? So we should be a bit more beta negative, hopefully. Maybe also adding Balfinger. Balfinger also very extreme correction, very cyclical, as we can see. Like we have this very cyclical pattern where we are rejecting always in cyclical waves from that 40 euros level. And we see a very similar reaction. You can just play that stop loss, but yeah, like this is something we could see. Yeah, just seeing a move higher and spot stopping everyone out. So it could be a shakeout. It could be a shakeout that we see a lot of shorts opening and then we just move one leg higher. So I would say be very cautious with tight stop losses. Like at 21%, I would be very fine with that because it's 2 for 1. So I'm probably also going short Balfinger. But overall, yeah, I think we're still in a early debt cycle. So that the debt cycle should still be continuing. So I'm not expecting a recession unfolding yet. Don't see it, especially with yields being that high. So we still have a buffer to the downside. So, but in the short term, especially August, September, we should see macro data being more bearish. But yeah, going to the next slide. So Fed funds futures rate, also the positioning of the market, expecting much lower yields relatively to the last month. Yeah, so yeah, also was the reaction of the non-farm payrolls. Also yields going a lot lower, especially if the front yield. So this just gives some hints for a possible meltdown in the next 2 months. So positioning beta short. And also here, we're having some interesting data coming in, especially with S&P Global Services PMI, not so important, I think, but ISM service is very nice. And also initial claims on, I think this is on Thursday and this is on Tuesday. So that's more or less it. Thanks for listening. Bye bye.